Treasurer Josh Frydenberg speaking after the RBA rate cut.
5%. In the RBA's statement, they've pointed to a gentle turning point in the domestic economy and the positive benefits that are being gained by the economy from the interest rate cuts, from the tax cuts, from extra spending on infrastructure, from the stabilisation of the housing market and for the uptick in mining investment. The Reserve Bank also has pointed to a reasonable outlook for the global economy, but they point out that the risks are tilted to the downside and that in making their decision today, the Reserve Bank has taken into account global movements in interest rates which have been downwards. Indeed, the Reserve Bank Governor only a week ago made a speech where he said it would be unhelpful for the bank to ignore these global movements downwards in interest rates because it would make it obviously more difficult to meet their objectives of the inflation target as well as full employment. It is the government's expectation that the banks will pass on this 25 basis point rate cut in full. What this means for an Australian family with a mortgage of $400,000 is $720 less a year in interest payments. That's a significant benefit to an Australian family. It's completely reckless for the Labor Party to be talking down the Australian economy. Indeed, could you imagine the challenges the Australian economy would be having if Labor had a chance to impose their $387 billion of higher taxes that they took to the Australian people and that the Australian people firmly rejected? In contrast, the Coalition has an economic plan that sees the Australian economy continue to grow, that sees the Australian economy maintain its AAA credit rating, that has helped see the creation of more than 1.4 million new jobs and to see the workforce participation rate at a record high, and has seen the government deliver the first balanced budget in 11 years. The government is focused on creating more jobs and ensuring the Australian economy continues to grow. Are there any questions?
Yes. Now that rates are again at record lows, when will you spend some money to stimulate the economy? We've got economists and businesses wanting you to increase new start, for example, for an immediate economic boost. How many more rate cuts will it take before that happens?
Well, as the Reserve Bank itself has made clear and the board has made clear in its statement today, the domestic economy has reached a gentle turning point, and they positively referred to the benefits that are flowing from the tax cuts, which are the most substantial in more than 2 decades, and which the Labor Party opposed. Let's get that right. The Labor Party opposed our tax cuts, which are now delivering billions of dollars into the pockets of hard-working Australians. We've also got a 10-year, $100 billion infrastructure pipeline that is being rolled out with record spending on infrastructure projects across the economy. We're also seeing apprenticeships being created. We're also seeing the benefits of the stabilisation in the housing market with the clearance rates now in the key markets of Sydney and Melbourne being above 70% compared to around 50% this time last year. So jobs are being created, the economy continues to grow, but we do face some significant challenges. Those challenges are internationally with the global trade tensions between China and the US, but they're also domestically, particularly with the punishing impact of the drought and floods.
Are you concerned about the effect of low rates on the housing market and potentially causing a housing bubble?
Well, we have welcomed the stabilisation in the housing market, and this is important because it plays into confidence for households, and household consumption is around 60% of GDP. We also know that for most Australians, owning their own home is not only their dream, it's their biggest asset, and they want to see its value appreciate over time, which has been the history in our country. In terms of the clearance rates, they've gone up, and in terms of prices, they're now starting to go up. So the interest rate cuts have contributed to a stabilisation in the housing market, which we welcome.